Every day is a whole different ball game for retailers, especially for retail traders who are trading in the Indian market. We really cannot say what is happening to Indian markets. One day it is gapping down, then reversing, going on the higher side, or if it is gapping up, it is coming on the reverse, coming down, or like what happens today, it is gapping up and going on the higher side. Now, why it is gapping up? Because global economy, global cues are really good. Why global cues are really good? Asia Pacific is performing really well. Why it is performing very well? Because of China's output, GDP growth is really good. Now, is this a good news for us, India? No, it is not a good news for India, because it will in turn give FIIs more space for taking the money out from emerging markets like India and taking it to China. Now, this has been, we have been saying this for a very, very long time. So, this should be a concern for us. But instead, what they are doing is FIIs are manipulating the market and taking the market on the higher side. Now, whatever we told yesterday, we will explain briefly in this video. So the first thing is what we told in terms of Nifty yesterday, in yesterday's video, and what happens today, what is going to be the order block, what the order block is going to be saying, where is the resistance, where is the new resistance now, new support now, since we have gapped up. What FIIs have done, they have moved their support level from previous level to new level. So everything we will talk in brief. So that is the first thing. We'll also see what is happening in terms of open interest. People whoever had huge calls return at 22,500, 600, 700, 800 had to run for cover. That is fueling the market on the higher side, and that is going to be the second thing. And third thing, we have very, very important binary event in terms of US market, which can make things worse, or which can make things give us a perspective of what might happen in the future. And the fourth thing, but last but not least, we'll also see what we have done in terms of our trade. Are we profitable or not? Are we performing what we have done, or what our people in our mentorship program has done? We'll see briefly in this video. But let me tell you, I've been saying this on a daily basis. We have a webinar on 30th of March, 11 a.m. It is going to be about strategies, what strategies we are using, how our strategies are profitable, everything we are going to see in that webinar. On top of that, you are going to get access to around 65 trading strategies, knowledge base, which is in our website, plus lots of video. We have contents we have in terms of trade setup. Daily evening we post video to our people in our hand holding, so you can also watch that video. So everything you can do, and the link is on the description below. If you want, you can join it, or you can just ignore it. Now, going back to the charts, let me take you to the charts. So this is the chart, and what we are seeing here is that market yesterday, if you had seen our video yesterday, we told that there is a strong resistance at around 22,600, which is around this area. You can see this area, which was acting as a good support. Right now, yesterday it was a resistance. Right now, once this has been broken, that is why we have mentioned here bearish order block resistance, and we haven't removed that yet, because you were seeing a huge resistance at this area. Now, what happened is, for a very long time, for, let's say, for example, for the last 2 or 3 trading session, if you can see this one, this green line was acting as a support and resistance. Now here you can see that the when the market touched around 22,700, it was rejecting. Then second attempt it was rejecting, then third attempt it was rejecting. That's why we told this was a very, very good trap. This was a shorting opportunity, and today it has broken this resistance, and it is obviously going to close above previous resistance. Now it has been the previous resistance have changed to a new support. Now whatever order block you are seeing here is the new support, that is the bullish order block. So what we will do is we will shift this bullish order block from here to here, right? This is going to be the bullish order block. The bullish order block is at around 22,000, maybe 22,650 levels to around 22,700. And this bearish order block, we will shift it to around 23,000 level, because that is where people are having, or let's say hypothetically, institutions are having huge orders, pending orders at around 23,000. So there is every possibility for the market to go on the higher side. Probably we will touch 23,000. There is expiry just one more day. Tomorrow is the last day, maybe day after tomorrow is the expiry. So till that we may see a good range, right? Now you have to remember, we exactly told this in our yesterday's video. Market cannot sustain for a very long in between 22,300 200 levels, between 22,200 to 22,500 or 600 level. It has to break these levels one day or another. And if you know what has been happening for the last 1 week, market was being volatile. It was between the range of around 22,200 to around 22,700, and today was a day where we saw a huge breakout, and market is trending on the higher side. There is every possibility that the market will go on the higher side, but you also have to remember that this order block is coinciding with the trend line, upper trend line. Now this trend line was not done today, it was done very long time back. And if I change this to a 5 minutes time frame, not 5 minutes time frame, 1 hour time frame, you will have a clear understanding of what is happening, right? So if you can see here, there is a bearish order block. Just now we shifted this bearish order block, and there is a bullish order block here. Now this trend line is coinciding with the bearish order block, so there is going to be a heavy rejection at 23,000 levels. Now if you are trying to short this market, you should be probably shorting this market at around 22,300 level is what I would suggest. Of course you have to do it at your own risk and responsibility, because this is going to be your trade. Whether you are in profit or loss, it is going to be your take, whether you are going to be long in this market or whether you are going to short this market, right? So if you are thinking to be long in the market, the correct time to be long in the market is at around 22,700 levels, or 22,650 or 22,600 levels. That is where you are having a huge order block. There is going to be a liquidity grab at around 22,600 levels. If the market, let's say for example, hypothetically speaking, as I told you, since it is not a good news for emerging markets like India, Chinese economic growth is not a good news, because FIIs will pull more money from India, which they have been already doing in a heavy way. So this is a concern for India. It is not a good news at all, but we are reacting to global cues, right? Now if at all for one or other reason that they have realized this is not the positive news for India, and if market comes to around 22,600, that is where you have to be long in the market. And there is probability from 22,600 the market may go on the higher side. Now if it continues to go on the higher side, maybe it will go till around 23,000, 22,900 to 23,000 is the range, or is the area where you have to focus, because as I told you, there is a huge order block at around these levels, plus there is a trend line which coincides with the order block. So there is every possibility that the market may revert on the higher side. Now what I will see, or what my perspective is, that there is every possibility that this market may go on the higher side, because US future is supporting whatever I told. US futures are all in the green, Europe is also in the green, Asia Pacific is really in the green. So there is every possibility, unless until there is any bad news, we are not going to come on the downside. We probably will go to around 23,000, and we will have to see what is going to happen at around 23,000 levels, whether we are going to reject or bulls are going to get stronger and go march towards 23,000 levels. So that is very, very important. So the conclusion is, if you are going to go long in this market, you can either go long now, or better if the market retraces. See, from yesterday close was around 22,500, today open is around 22,600, and we have rallied to around 22,800. So there is a rally of around 300 points already. Market has rallied 300 points. So if you go long now, I'm not saying you shouldn't be long now, you can go long, but when the market is at around 22,600 or 22,700, that is where your risk reward is going to work in your favor. You are going to get a good opportunity at around 22,500 or 22,600, right? And if you are trying to short the market, try to short it around 23,000 levels. So there is a disclaimer, you will have to do it at your own risk and responsibility. Anything can happen. Markets are hypothesis or hypothetical. So whatever we are saying is hypothesis or hypothetical. So that is the first thing. And in terms of open interest, if you can see here, there are big red candles all over the place, negative red candles, negative not candles, negative red bars. Now all these things are people whenever the market is going on the higher side, people who have shorted this market have to run for cover. So that is what exactly we told yesterday also. So when market tries to go on the higher side, there is actually, we expected this on the opposite direction, which is on the downside, but contrary to our expectation, market is moving on the higher side. So when the market is going on the higher side, you expect all these call sellers to, whoever shorted the market, to run for cover. So they will exit the shorts, and that in turn will fuel the market, and that is what exactly is happening. We are almost at around 22,000 levels. Now if you see the open interest, the highest open interest on call side is at around 23,000. Now we have to observe this area. Now as of now, the total open interest at around 23,000 is around 39.21 lakh. So tomorrow we will see whether this is increasing or decreasing. So there are lots of factors which we have to consider in between. So just keep this in mind so that we will get an idea of what is happening in terms of trades, or what is happening in terms of the market, right? So this is the second thing. And the third thing is what is happening in terms of our trade. Now in spite of market moving around 300 points, still we are in a profit. Our MTM is in a profit of around 5k. So we have time now, 2 or 3 days is left, not 2 or 3 days. These are all trades which we have taken on March 20th expiry. So we have another one more day. So we will see some kind of theta decay when we near expiry. So we don't have to worry about that. We will see what happens. If you are watching our videos, we were delta negative. We shorted the market, believing that the market was going to come on the downside, but the market has come on the opposite direction, or traveled in the opposite direction. So we had to book some losses. So you will come to know whether we are in profit or we are in loss. So the point here is, we are now delta positive. Let us see what is going to happen. We expect the market to go to around 23,000 levels. That's why we are having a delta positive position. So that is the third point. And last but not least, in terms of economic data, tomorrow is going to be very, very important thing, which is going to be federal rate decision and FOMC economic projection. And I really don't know why this is happening on Thursday night, one day before expiry. I really don't know. I have been wondering, and I have been asking this question to myself lots of time. Why do this Fed people keep the minute Federal Reserve interest rate decision one day before expiry, right? So this is going to create lots of volatility, lots of problems in terms of our expiry. So we'll see how things work out. So be careful, hedge your position. I've already talked for 15 minutes. I'll end this video here. I'll see you in yet another video. Till then, take care. Bye.